This mentorship will be a complete guide for day trading futures, mainly the NASDAQ 100 and the S&P 500 indices. I've been trading consistently for around 2 years now, and I can say if you stay consistent for even just this month alone, I promise you will see growth. But why should this be a skill you learn? Alright, it's a side hustle just like starting your own business, so like you're gonna have to risk a little bit of money. You aren't tied down to this either, so like you are able to work your regular job while doing this, while learning this, and plus it's better to take like 3 trades a week. A lot of people think they have to be on the charts for like 4 hours a day. That is not true at all. If you could take 1 trade a day, you have insane discipline. If you could take like 1 trade a week, I wouldn't recommend it, but if you could take 1 winning trade a week, then bro, you're actually different. And this is something that you can learn for completely free while you're still working a job. So it's just another side hustle. So like, why not? You feel me? And like I said, there's no time limit to your success, bro. You could take 1 trade a week. You could take 100 trades in a day like I used to. There is no time limit. But now that I told you why you should learn it, let's get into what's really going on in the markets. What is the NASDAQ 100 index? The NASDAQ 100 index aggregates the largest 100 non-financial companies listed on the NASDAQ exchange. For example, people will invest in companies like Tesla and Coke, right? So not only does that add to the NASDAQ market moving, for example, I'm going to zoom in real tight. Look at this exact candle. Wait for it to move. It's kind of really choppy right now because it's 10:04 in New York. Oh, all right. You see how it just went up? That means somebody bought, in a sense. Someone just sold, in a sense, right? Wait for it to go either up. Oh yeah, see, a lot more people just bought. Like you see, if you don't, that's okay. We'll get into it a little bit deeper later. But anyways, so you have NASDAQ up here. You have NQ. And then you have ES, which is the S&P 500. So number 1, this is the top 100 businesses in one stock chart. So instead of like this being the Tesla chart, this is all like Tesla, Coke, shit, Bath and Body Works. I don't even know, to be honest, but you understand, hopefully. And then this is the top 500. So long story short, this should have more volatility because this is the top 100, and this is like supposed to be weighed down in volume because it has 500 businesses. So, all right, look. For example, you see this low right here. This is a low on the 1-minute NASDAQ chart. This happened at 8:53. This is the candle. So I'm going to go to 8:53 on ES2. Ready? That's right here. This is that same low that I drew out. And then at 9:37, ES went under that low. And at 9:37, NQ didn't. So that is called a SMT divergence. That is when one of these charts, one of them goes under and one of them doesn't. Why does that matter? So that's like the only correlation that these two markets have that I'm pretty sure. And it's supposed to help you form bias. This is a bullish SMT because we went under a low on ES. We didn't go under this low on NASDAQ. So that means we should probably see higher prices. We'll get more into detail. If you have any questions, leave a comment down below. I'm just trying to go over the basics today. But yeah, that's why the NASDAQ and the S&P are correlated. I'm just going to switch topics. We'll get back into it another video, I promise. But people are buying and selling at every point in the market. It's just sometimes, depending on the time and the price, will it react in a certain way. Like if you're going to buy full port longs, aka put down your whole position, do you think you'd want to do it right now when it's barely moving? Like, there's probably nothing of value in this time of day or at this price level. And I will be teaching you the best times of days, and I will be teaching you how to find the best price level. Holy shit, I can't talk. But just like give it time. I'll go over it eventually in the mentorship. If you have any questions, leave a comment down below. One more example. Old people will like to invest into stuff like this. I have a book. I forgot what it's called, but it literally tells you something like, oh, NASDAQ will annually give you like a 14% gain. You're supposed to put like a percent of your monthly income into the NASDAQ, and you can like pull out money when you need to. So a lot of people are going to be putting a lot of money into this and then checking it like 10 years later. I mean, that's cool. If you want to do that, that works too. That's like placing 1 trade and checking it 10 years later. Like that's maximum level discipline. If you want to do that, good for you. But my goal is to help you work on your personal skill to develop and navigate these markets every single day, or a couple times a week, or once a week, or once a month. I prefer at minimum 3 times a week. I don't know how many more notes I have to go over before I show you guys how to get set up. If you guys do want to learn more information My personal mentor is ICT. A lot of people like to make fun of him. I'm just saying I personally recommend him. If you want to get directed to an exact playlist to watch, I would recommend the 2022 ICT Mentorship. Just watch it. You honestly don't have to take notes. If you do take notes, just know that you're probably going to be doing better than some of the other people that are trading, right? If you want to maximize your progress, you might as well be taking notes. You don't have to take notes with my videos. All you have to do is leave a like on it and maybe come back and watch it later. I'm making this mentorship just in case I go brain dead and I need to relearn, or like my mom needs to relearn how to do this shit, because you know, if I go brain dead, then we're gonna be broke. So like, with that being said, I think I covered everything that I needed to. So I'm gonna show you guys how to get set up. If you want to start for completely free, if you're trying to start trading for completely free, this is exactly what you do. Tradingview.com, and you're gonna make yourself an account. Once you make your account, go to search, top left, type in NQ1 exclamation mark. This is what it's probably gonna look like. All right, scary. You have no lipstick. You have no idea what you're looking at. First of all, head to the daily chart. You're going to zoom in, but you want to make sure you have this low and you have a recent high. Not this exact low, but you know, a swing low and a swing high. Okay, I removed every single drawing. So this is what your chart should look like in a sense. Maybe it's like different colors. I know this could be nerve-wracking, but just give it a second. It will all start coming together eventually. Number one, favorite the NASDAQ over here. Bookmark it to the right. You don't need anything else. You need NASDAQ and the S&P 500. How do you get to the S&P 500? You're going to do ES1 exclamation mark. There we go. And then you're also going to bookmark this. And then boom. You're going to have this. And then you're going to be able to switch over. And then you have S&P 500. Boom, boom. Cool. Top right, there's a box. You have a lot of different layout formations. You start on the regular one. You could go to this one. This is a pretty common one. It's pretty nice. If you click on the one on the right and then tap S&P 500, you'll be able to have this chart and this chart open at the same time. I will be doing it just because I want to show you guys for completeness sake what a SMT divergence is. I'm going to stop yapping about confluences. But if you really don't know what I'm saying, like either write it down in your notes as like a vocabulary word, or like, I don't know, just give it a second. You know, take a deep breath. I'll probably go over it in another video. Yet again, I'm making this mentorship just in case I go brain dead. I'm not going to forget anything I wouldn't want to know. Also, I have 2 years of market experience and I've pretty much learned everything by myself. I'll give credit where credit is due, but for the most part, I am solo dolo on some shit. Everything, at least 90% of everything that I know has come from me or from ICT, the source. That sounds like dick riding, but it's not. Number one, you're going to have delay. This does matter a little bit. Why does it matter? Because, number one, change your time zone. Click bottom right and go to New York. All right, number one. Number two, New York market open starts at 9:30 a.m. from Monday to Friday, every weekday. It's closed on the weekends. With that being said, the time frame from 8:30 a.m. to 12 p.m. is one of the best trading hours. I would say personally from 8:30 to maybe 11 or 9:15 to 11, you can definitely catch one trade. If you really don't have the time, like let's say you're at work, you know, eventually you'll have a day off where you can trade. So just keep on learning this shit and you'll be fine eventually. Number two, you don't have to trade for like an hour. You could trade for 15 minutes. You could trade for 30 minutes. Actually, that might be cap. Hop on the charts at least, bare minimum, 9:15. If you are up 15 minutes before market open, don't even think about it. Just go to sleep for the rest of the day, bro. Trust me, it'll save you in the long term. Number two, wake up at least 9 a.m. in the morning. And then you see 9:30 a.m. market open. And then you're going to try and wait for something. You will find something in the first 30 minutes of trading. You will find at least one trade. I recommend you take one trade, win or lose, you're done for the day. And then you journal that trade and then you see what happens. I'm going to stop yapping. I'm going to start showing you guys how to actually form buys. One more thing. If you're trying to go the free route, paper trading down here, you like make an account and then you'll be able to place trades in the market. So I'm currently on my paper trading account. As you can see, my account balance is 107,000. That's pretty cool. You go in the market. If you right click, you could do buy 10 and then you move your stop loss and then you move a take profit and then send order without real-time data. So what that means is you are 10 minutes delayed. That only matters for like market open and if you're actually taking real trades. If you're paper trading, There's no difference. There's literally no difference. You have nothing to prove to anybody. The only problem is that market opens at 9:40 instead of 9:30. If anything, that's better for you. It gives you 10 more minutes of sleep. So if you're trying to go the free route, paper trading is the way. Anyways, we're currently on the daily chart. So top left, you have your time frame. You might be on 1 minute, you might be on 1 hour, you might be on 4 hour. Go to the daily. And then you have the S&P chart. You have the NASDAQ chart. Boom. There's no drawings. Our charts should look somewhat similar. You have candles over here, you have candles over here. Since we're on the daily chart, we're gonna zoom in real close. So we have, we have from this low to this high, we have pretty big legs up, and then we have a consolidation. And then we have this low to this high. You can go from this low to this high too, because we started consolidating a little bit more up here. Matter of fact, let's do that. So we have this high, and we have this low. So we have a consolidation, and then we have the first big expansion move. This was like 5-6 days of just straight greenness. Okay, so you go from the high of that to the low. Boom. And then within this zone, this might seem a little bit scary, but I promise you will eventually end up picking it up. You will eventually end up seeing, oh, this is a fair value gap. Oh, this is an order block. Just give it time, bro. Trust. So this candle, this candle, this candle. Any 3 candle pattern, let me make this white. So this is the wick. You can't really see it. I'll try and, oh wait. Okay, for example, this is a wick. I can't believe I'm teaching this right now. Background, why is it 100% opacity? So what I have boxed out right now is a wick, and this is a candlestick. So you have a body, and you have a wick, right? That seems, it's a candlestick. And then you have this bottom candlestick. If you were to cover up the bottom candlestick, you would actually see that it looks like a candlestick a little bit. Like this is where we're at, this is where we burn, and then, but the only problem is you have a bottom candlestick wick. So if you have a 3 candlestick pattern where the top of the wick is right here, and then you have a very long body, and then the next 3rd candle, if there's any gap between this candle wick's high and this candle wick's low, as you can see, there's a gap. And I'm gonna, hold on. So you take that gap from this low to this high, and then you mark it out. For example, this is a fair value gap. Another one is a liquidity sweep. So let's say you have this range right here. Okay, you have this low to this high. So this is a prominent low. In a sense, this is the external low, and this is the external high. This is the next low that formed inside of that this is the low that formed inside of the external. So this is the internal, and then so you have this low, and then you have high, and then you have this high stops right here, and then it comes back down, and then boom, you have this short-term low. External, internal, short-term, and then you have this high, you have this high, and you have this high. This high, it was pushed up, it was broken through. This high was pushed up, and it was broken through. This high was also pushed up and broken through. So every low, we're making higher lows, and we're making new higher highs. This is the short-term low. You draw it out. Let's say you can't see this. I'm going to delete this, this, and this. Focus your attention on this low. We come down, we make an equal low. We stop at the exact same point in the market. Once we come down below these lows, we are sweeping people out of the market. Below every single low, below every single candle body, I should clarify, there will be people waiting to get in and waiting to get out of the market. Let's say, for some reason, I knew this long was going to be insane. 1 to 9.2. This is where I bought in at. Hypothetically, let's say this is where I bought in at. This is the exact point in the market at 16,678.25 on April 7th. Oh my gosh, look. Oh, wow, wow, wow. Whoa, my take profit's all the way up here. Well, until we drop down below this low, I will technically have an open position. So with this being said, below every single low, somebody will have an open position. Why does this matter? Because at every single time and at every single price in the market, people are willing to buy and people are willing to sell. Somebody just bought right there. You understand? That's the same thing going on here. And plus, every time frame is pretty much the same in a sense. Every time frame, you have confluences. For example, this is a daily fair value gap. This is a daily order block. An order block is a down move before an up move. If we were to come down and close below this order block, I would probably assume that we're going to go lower for a little bit. And then you guys might think, well, doesn't that make this candle an order block then? Technically, yes. But that's when we're going to get into more details later in the mentorship, talking about some time and price. Like, why didn't this order block hold? Like, why did it go through all of this? But why did this order block hold? And same with, we come down. Why did this order block? We come down, we use the 50%. I promise you, look at this. This is how beautiful this price action is. Okay, I lied. No. I did indeed lie. We wicked under it. But like, pretty much to the 50% line. Come down, yada yada. Anyways, I don't even know where I'm at. I'm just kind of yapping, pretty much whipping it out on you, letting you know every ins and outs of the foundation for a beginner trader. This might be a video you have to watch a couple times. This might be a video that you leave a dislike on and you never watch again. Yet again, I'm not the best mentor. I'm just giving it to y'all for free. And yet again, if I go brain dead, I want to be able to relearn this shit. That's the only reason why I'm making it. I'm not making it for no bread. I'm not making it for street cred. Anyways, we're going to do a top-down analysis. I'm trying to go slow, but, we have a fair value gap, we have an order block, and we have liquidity sweep set out. And then one more thing, a break of structure, just in case. So you have a high, you have a low, you have a high, you have a low, and then you have a high, you have a low. Oh, you have a lower low for some reason. This is a break of structure. But sometimes it's not going to work. Just because we close underneath these candles doesn't mean that we're going to keep going lower. It's so fucking confusing, especially if you're a new trader. Just give it a second. Alright, I'm going to do this top-down analysis, and then I think I'll be done for the day, because I'm whipping hella information out, especially for like episode 1, episode 0. So let me chill out a little bit. We have the same thing over here. We have these lows, right? We have these lows on ES. We originally had these highs. We broke through these highs. We only swept these lows. You see how the wicks barely go beneath this line? That's the liquidity sweep. And this was another sweep of liquidity. So anybody who went long right here, as soon as it came down, they probably sold short thinking it was going to keep going short because they bought down here. They see it, they get stopped out. They probably, I think it's going to go shorter. Boom. You just got used as liquidity, buddy. And it's happened to me too, and it's probably going to happen to you, but just know that you will be able to overcome and you will be able to be a demon trader with time. I'm going to give a top-down analysis. I'm going to tell you guys what it is. I'm going to tell you guys why I use it. I am a top-down analysis trader. I'm a smart money concept. Holy fuck, I literally can't talk right now. Anyways, daily, you're going to go into the 4-hour time frame next. First of all, you see a prominent high and you see a prominent low. This line was all done on the daily chart. It's kind of good if you have it labeled out. For example, double tap and then add text. 4-hour liquidity. Boom. Actually, maybe I'll label this stuff out for you because it'll probably help. Oh, I just voice cracked. That's how much I'm yapping, bro. So you have 4-hour liquidity down there. You have 4-hour liquidity up there. right? 4-hour liquidity, 4-hour liquidity. You have a buy side imbalance, sell side inefficiency. No, wait, it's the other way around. You have a sell side imbalance, buy side inefficiency. A sell side imbalance is when there's a lot of movement to the sell side and not a lot of movement to the buy side. That's also a fair value gap. A SIBI is a fair value gap, and a BISI is a fair value gap. Buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency. Holy dude, this is a whole entire freaking tongue twister. Anyways, so we have this inverse gap on a 4-hour. When it comes back down to it, I want to see some type of good reaction. On a 4-hour chart, it could come back down. It could wick into this bullish fair value gap. So you have from this candle wick's high to this candle wick's low. I'm going to make it a nicer color. You have a bullish fair value gap, and then you have this bearish fair value gap because it's going down, and then this one's going up, and we didn't respect this one, so we ended up inversing that gap. So now both of these gaps are used to the upside. You see how this got used as kind of like a slingshot? It's going to come down here, is going to build resistance, and if it for some reason wants to break down here as well, then it's probably going to want to up to the upside, right? And then you also have another bullish fair value gap right here. So if it comes down here and it wants to come down here, honestly, this would be a really good entry. And now that we're, talking about confluences, a Fibonacci, top left, it's literally the first one. You go from a high, and then you're going to draw it down all the way to the low. Boom. This is your Fibonacci. Go into the settings. Copy this. Number one, you're going to need the 0.236 level. You're going to need that. Turn off background. Use one color. I would use it, make it white. It looks cooler. Take off the trend line. It kind of pisses me off. I'm not going to lie. Wait, no. Take off prices. Put levels. Yeah. You're going to need that. Boom. Oh, wait. And then levels that you're going to need the 3 extension. You're going to need maybe the 4 extension if you want it. The 4.7, you're going to need this for max extension. And then whatever other extensions tickle your fancy. I personally like the 2, the 2.272, the 3, the 4, and the 4.7. This is the max extension. If you end up following what I say about Fibonacci, you will end up being able to catch trades. And I'm going to give you a model right now. Okay, I'm on a 4-hour time frame. So you have this low, you have this high, and you have this low. This low is prominent because if you were to zoom out, you can kind of tell by eyeballing it. You have these lows, this low, this low, this low. They're all relatively even. So the second we go below this low, because you have one low right here, one low right here, one low right here, this is probably going to be the prominent low. And then I'm just going to say it. I'm going to assume like you guys are going to understand what I know. This is the external low. So that means this is the internal low because we just have this straight up move. Like you could say this is the internal low too. But technically all of these are internal lows. This is like, I don't know. Let's say this is the next move because this is the low before the expansion and then we consolidated. So the low before the expansion. So you have these two lows, right? But they ended up getting broken to right here. And then, so boom, you went up a little bit and then you went below both these lows. And then you also tapped this order block right here. The down candle is an order block. You see? Tapped it. And then we expanded off that. So this is now a prominent low. So this low external, this low intermediate, and then these lows are like short-term lows. They're probably going to get taken out. You have external, intermediate, and then short-term. Don't get caught up in the short-term confluences. So you have these two lows. This low gets swept, right? This is that same low line. Okay, so we have we have a big expansion move off of this. So I'm gonna go from this high, start at the high, And since I'm bullish, I'm going to drag it down to the low. The 0.5 level is equilibrium for any range. This is a 4-hour range. So from this low to this high is a range. What I've personally noticed, honestly, if you were to set a limit order at the 0.236 level, you put a stop at the low, and then you extend it. You could extend it to, the 1 back to the recent high. That's a 3 RR. You could extend it to the 2. That's a 7.21. This is probably a realistic trade. Once it comes back down to the 0.236 extension of the Fibonacci range, because it'll probably, oh wait, go back in your Fibonacci. If you don't have the 0.382 level, you're going to need that. The 0.382 to the 0.236 is ICT's optimal trade entry golden zone, quote unquote. Anything in between here is normally pretty good. What I've noticed is that it'll like to come and it'll like to wick the 0.236 discount level, and then it'll end up going up. Maybe it'll come down, it'll sweep liquidity, but that's when you involve time and price, and then you kind of add it all together like a puzzle, and then it'll end up eventually presenting itself. But don't jump the gun, because I promise you, you will not get left out of the trade. You are going to get used as liquidity before the trade goes on, and that's what happened to my live trading today. Matter of fact, let me just show you guys. There's not really too much to use or look at, but I'm down 160, and then I'm looking for shorts. It ends up going up more. I'm looking for shorts again. I think I find something. Ready? I enter a short. I'm up 190. It's looking pretty decent. Next thing you know, I get stopped out, and then I take another trade. It's just like, this is my level. If I did a limit order sell right here, I would have been in a way better position, but then I started chasing price, and I ended up getting stopped out. Long story short, you will not get left out of the trade. Sit on your hands. It's better to wait than to take a trade and feel like you might get left out if you don't take this trade right now. Like if you don't take this inverse fair value gap right now, you're going to get left out. This is also a bearish fair value gap, as you could see. Let me make it more perfect. So you have a gap to where this wick and this wick doesn't touch. This body is just completely unclosed. We came back up and we used this gap. We wicked out of it, and then the body closed below the 50%, the consequent encroachment. I'll get into that later. But I want to see, this might be a little bit hard to see, but from this candle wick high to this candle wick low, I want to see this gap get inverse. So that means that we're going to have bearish candles, and that this body is going to close below here. I want to see this gap get inversed. I want to see us come down all the way to around probably the 0.382 level to this fair value gap, and then hopefully to the 0.236 level. Have a limit order down here, have my stop loss right here. So this gets inversed, this gets used, comes down a little bit more, boom, 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 hits this, wicks into this, and then we're going to end up going back up. Realistically, this isn't real, but the 4.764 level seems to bang a lot. As long as you have the right extension, like if you find the right extension on a 1 minute, time is fractal. You can find this exact same looking thing on a 1 minute chart. This is a 4-hour chart. Every single candle is 4 hours long. And you can go down to a 1 minute chart. Holy shit. And then you zoom. All of these gaps that I drew out are on the 4-hour chart. And let me just show you the same thing. So you have external low, you have an intermediate low, and then you have these short-term lows. And then you have an external high. Wait, no. This is the external high for the thing. This is the external high. This is the intermediate high. And then this is the short-term high. This got broken through. We made a higher high. This got broken through. We made a higher high. External low, intermediate low, short-term low. Intermediate low and the external low didn't get broken through. Of course, the short-term low got broken through. We liquidity sweeped. Okay. And then we have a bearish fair value gap right here. So we had a liquidity sweep, and we inverse this gap. So this is already good structure. Then we have a bullish fair value gap right here. Let me make it green just so you can see it different. Oh, wait, no. We have a bullish fair value gap right here. And then this is also an order block. It's the last down candle before the up move. As you can see, this is an A plus entry, bro. This is an A plus entry. Liquidity sweep. This is all in the 1 minute too. This happened at 6, 7 p.m., 8 p.m. I don't know why 8 p.m. is giving me A plus setups. But anyways, liquidity sweep, liquidity sweep. And then you have an inverse gap. You could honestly enter on the inverse gap with stops at the low. And if you are going to do this, move your stop loss right here. Look at the right. As you can see, 31925. 31925. I'm going for 31925. I'm going for 30925. This is a 10-point stop loss. Or you could just put it at the low. I personally go for a 10-point stop loss. That's 50 ticks. Or, so 319.50, you can do 299.50. This is a 20-point stop loss, and 20 points is also 100 ticks. That will make a lot more sense into the future. This stop loss seems really good because it's underneath the consequent encroachment, and plus you have this low right here. So this would be a really good stop loss. And then, you know, you could at least go for a 1-to-1. See, 1-to-1 you bang pretty easily. And then if you wanted to go for a 1-to-2, 1-to-2 bangs pretty easy. Like you see, we're going to end up getting into teachings on how to catch trades like this. How long have I been yapping for? For 40 minutes? That's not that bad, because I'm going to cut it up a little bit. But anyways, so all of these are on the 4-hour. And then I went down to the 1 minute to show you guys that time is fractal. As you can see, like this kind of looks the exact same as the 4-hour. But it doesn't, because it's not. Because every candle is 1 minute. But if you go to the 4-hour, every candle turns into fucking one candle is 4 hours. I feel like I've gone over a lot today. And then, you know, you keep on going through. You have the 1 hour chart now. And then eventually it's going to end up getting real messy. Eventually I'll be able to teach you exactly what to look for. But pretty much I'll kind of tell you what to look for right now. Anything below the 0.5 level, if you're looking for longs, just honestly get rid of it. I would keep this to like show you that it wants to go lower. But anything, if you're bullish, aka you want to see price continue going up, if it were to retrace below the 0.5 level, there's an order block right here. So this is a very very beautiful level. As soon as it reaches below the 0.5 level, it gets into a discount. What I've noticed is that this is the 0.236, aka like 25% off discount. That might make no sense. Let's say there's a book at every single point in the market, and you are investing in this book. Either you're selling up here, like let's say the book author said the hard R and you know that their shit is going to tank. Let's say you sell and then boom, you can buy it back down here for a lower price. So you sold it for a lot and then you bought it for a lower price. Or let's say you're trying to invest in a book. You're definitely not going to want to buy it up here unless you know for a fact it's going to go crazy. If you want to invest into something, you're going to wait until it, you know, drops in price to at least 50% off, because that's decent. That's not bad. So once it hops in the discount, you're going to start looking to be able to buy it. And then the safest take profit, you'd want to sell your book when it gets back to the high, because you don't know for a fact if it's going to keep going up. You will be able to know, because if it comes down here, grabs liquidity, grabs this order block, hits this fair value gap, and goes up higher, I'm not going to sell my full position at this high, because I think it's going to go for either this fair value gap. I know it's going to go for this fair value gap, aka let's mark it out. So this is a bearish fair value gap. If it comes up here, I want to see it go lower. And let me give you a bearish example for the Fibonacci. Fibonacci top left. If you're bearish, you're going to go from the low to the high. Same thing. Anywhere between the 0.382 and the 0.236 level is golden zone optimal trade entry. In this area, you have a fair value gap from this wick to this wick, from this wick to this wick. You extend it over, boom. So once it reaches into this fair value gap, I want to see how it reacts. If we're fully bearish, I don't want to see a candle closure above the 50% line. If you go to style, middle line, you'll be able to see it. I don't want to see the body close. It could wick through. It can wick through. ICT teaches that. If for some reason it wants to come up here, I could understand that happening. But ultimately, this would be the liquidity I'm looking for because I'm bullish and I want to see higher prices. We have a really, let me move it over here. We have a down move, and then we're starting to recover. We have a break of structure after this candle, because technically this should have been used as an order block. A down candle, or an up candle before the down move, since we're bearish. This should have been used as an order block. As you can see, we came back up once we visited this level again. So this is the bearish order block, the up move before the down move. And if you don't understand this right now, it's okay. Leave a comment down below, and I will get into it in a future episode. Once we reached this level, we started showing resistance. We also made this bullish fair value gap, and we tapped into this 4-hour fair value gap just barely, and we moved exponentially off this. We're going to resist from this level. That sounds fucked up, but because the whole point of NASDAQ is to manipulate small-minded traders and retail traders especially, because this is a money-making fucking skill, and people with low intelligence or ignorant people are going to come into this market thinking that they're going to make hella shit, and then they slowly realize that it's not as easy as they think it is. I don't know how much more information. I don't know if I'm doing a mentorship in one fucking video or if I'm doing a mentorship, throughout the month. But my goal was to do a mentorship throughout the month. But I'm just yapping. But I could yap all day. Genuinely, I could. Maybe I should start doing live streams. I'm not trying to get hit by the FBI. Also, another disclaimer, this is not financial advice. I'm simply teaching you the skill of trading and how I personally maneuver the markets. I have not made any money off trading, and I've been doing it for 2 years. What does that tell you? That this skill is going to take a little bit longer than you think. Is it going to take 2 years? Absolutely not. I honestly don't think it's going to take longer than 1 year. But this is a skill like riding a bike. This is not financial advice. I'm just teaching you how I look at the market, and I'm teaching you how I can kind of predict what's going to happen next, because everything happens in an algorithm. Time is fractal. And yeah, with that being said, I've been recording for 45 minutes. I think that this video is going to be probably like 40 minutes long, if I were to guess, because I've stuttered a lot and I got to go into my editing software and cut that shit out. Please ask me any comments. Please ask me any questions in the comments down below. I'm just going to stop right here because holy shit, dude, like I don't even know what else to talk about at this point. And I've been being asked a lot for this mentorship. Let me clarify. I'm not the best mentor. I've only been doing this for 2 years. The only reason why I'm doing it is because I've had a lot of people ask me about a mentorship, and I thought it would be cool. I don't think I'm in the worst position for it. And then, yeah. So today I went over how to start trading for free. If you have a little bit of money, honestly, I wouldn't even buy the real-time data. This is not sponsored, by the way, but if you search up futures funded account, and then you hit buy, you have Trade-Evade, yeah, you have all these different ones. I personally recommend Top Step. I've also heard that My Funded Futures isn't bad. I've heard that Alpha Futures isn't bad. Alpha fucking sponsor me. I've seen you sponsor some shitty ass traders, and that's not dogging on them either. I'm just saying, like, if you're gonna sponsor them, you might as well sponsor me too. Alpha is a funded prop firm you can use. If you have $50 that you are willing to give up right now, this sounds like a sponsorship, but it's not. I would recommend searching up Top Step and then making an account. We can go into it in either tomorrow's video. I don't know if I'm uploading a video tomorrow or not, or just in the next mentorship video. If you are willing to give, you don't have to give money. If you are genuinely a new trader, like let's say you're my friend, let's say you're my brother watching this video. I don't need you to put $50 into it right now. You can do the first 3 months of just learning the skill. You aren't here to make money, you're here to learn the skill. Please keep that in your mind. Write that shit down right now. You're not here to make money yet. You're here to learn the skill. If you can perfect the skill, the money is scalable and the money does not have a limit on it. That's all I gotta say. With that being said, that should motivate you enough to just want to learn. Why wouldn't you want to learn this shit? If you want financial freedom, this is the best way to do it. Let me go over my personal winnings and losses. My monthly P&L is 71.82. Today wasn't the best day for me. Actually, it was like a decent day for me. This is my model, and yes, I'm claiming it. Okay, so yes, I took an L today. No, I don't give a shit. Suck my dick. So this is the level that I had marked out before market open. I had 23202 marked out and 26, or my fault. I had 23202 marked out and I had 23261 marked out. The 10 a.m. news candle wicked my level. I don't really remember what my level was, but it was something, and I will be able to teach you guys how to find levels. Anyways, the 10 a.m. candle wicked it. I didn't know that this was going to be the valid rejection block, but you draw it out and you enter at the 0.236 level. You enter at the 0.236 level with stops at the high. That's a low risk. From 23261 to 23264. Bro, if you trade with, I'm not going to get into that, but anyways. And then take profit at the 4.7 extension. I will get into this more. This is my model. This is the easiest 19RR of your life, and it plays out pretty consistently. Imagine catching a 19RR trade per day. Realistically, you could lose 19 times, or you could lose 18 times and win once, and you would go break even. I will be able to teach you guys this model. Hopefully I don't get hit by the FBI for this shit, but this isn't to make money. This is the skill. This is the model I've been able to find on my own, right? I haven't made any money. I'm being completely transparent. I've been doing this consistently for at least 8 months, but I've been doing it for around 2 years. I haven't made any money into my bank account yet. I've only invested money. So keep that in mind. But just know, this is what I want to do as my future job. That's all I'm going to say. I'm not trying to fucking out myself out to anybody that could be watching this right now. I'm just trying to keep it mellow. I'm just trying to help a youngin' out. And then also, this happened too. You have this rejection block. Maybe you were too scared to enter on it. Right? The 0.236 level. It 0.382 to 0.236 is the optimal trade entry zone. It wicks in between those two, but it doesn't really go to the 0.236 level. I love the 0.236 level. If it's going to go to the 0.236 level, you have this rejection block. You start from the wick down to the bottom of the wick. And then you put a long position, put your stop loss underneath the low, and then you're going to target the 4.7 level. That's another 1918 RR trade that happened in the same day. I will be going over this model very soon. I pretty much just gave you the easiest model of your life. It takes no fucking skills to learn how to be good at this. I will teach. That sounds a little fucked up, but I'll be teaching you guys. Don't worry. All you know is if you have a prominent range, you take the Fibonacci from the high to the low. I've never heard anybody else say this shit ever, could ever, never. Okay? Limit order at the 0.236, stops at the low. And then you could easily bang to the 1. You could easily bang to the 3. What I've noticed, you could easily bang to the 3. And you can easily bang to the 4.7 too. With that being said, I'm done talking. That's a good episode 1. There's a lot of value in this. If you guys don't like it, I don't give a shit. It's not for you. It's for my future self, just in case I go brain dead. Or for all my friends that I need to put on, because I'm not going to name no names. But motherfucker, I've been trying to put you on for a little bit now. And you're all like, oh, bro, yeah, I wake up. Oh, yeah, I wake up. I just don't want to trade. All right, bro. Why don't you shove another finger up your ass, you little bitch? What do you mean you don't want to trade, bro? Wake up, bro. Damn, bro. This is a skill that could make you a man, bro. This is a skill that teaches you discipline on some shit, man. Fuck. Also, final note. I'm really not the best trader because I have bad discipline. 14 trades, I made a band. 34 trades, I lost a band. It's good to take maybe like 1 trade a day, maybe like 4 trades a day. But every time you add up, I'm not even going to get into this shit right now, dude. I literally can't. I could talk about this shit all day, but I'm not going to. I'm done. Thank you for watching. Please leave a like. If you find value, share it with a friend. I'm sorry if this is confusing. Yet again, leave comments. I'm not paying anybody anything for this shit. Or I'm not making anybody pay anything for this shit. Just ask comments. I'll answer it for free. And plus, if you ask a comment, I'll be able to use it to build my mentorship, to make a better video, to make a full, complete guide. This is the August 2025 mentorship. I hope you guys enjoyed. If you know me personally in real life, just act like you don't, because this shit is probably embarrassing. But thank you guys for watching, and I will see you guys in the next mentorship episode. Hasta luego.